Momentum is still moving up. There is no bearish divergence, so all seems very fine, but maybe it's a bit too perfect.
So Bruno, welcome back to the studios.
Good morning, Jessica.
So following on from your discussion 2 weeks ago, how long can we expect this bull market in equities to continue?
Well, let's look at first the emerging markets, which are doing very well indeed. As we see, they have been going to higher highs compared to the top of March. And there is really no signs of weakening. Relative strength versus the S&P 500 is rising. Relative strength versus other emerging markets for China is also rising. Momentum is rising, all is fine. India is looking a little bit different. There was the Trump slump, which brought it back down a little bit, but a nice rebound, where also the relative strength is rebounding, so that sounds good. Brazil had its not only under the influence of the Trump slump, but also own political slump in impeachment procedure probably, and that makes it a big from the top of the range to the bottom of the range, where we were back to the beginning of the year in December. The rebound is a little more muted indeed.
And in the US equity sector, so technologies are still performing very well.
Yes, indeed. And you see, you had the Trump slump, and immediately 6 days later, higher highs with rising relative strength, making also higher highs up there. Momentum is still moving up. There is no bearish divergence, so all seems very fine, but maybe it's a bit too perfect.
So Bruno, talk us through where your worries are coming from.
Well, while we were doing higher highs on the technology, see, the same day yesterday we were making a decline in small and mid cap. Small cap here, mid cap here did the same. Somehow we have only large cap and a few large caps in the technology sector which are really holding up the market. That's called a lack of breadth, and that's usually a sign that there is a little bit some trouble in the water.
But is the US sector rotation, is it not supporting the bulls?
Well, you see, US sector, usually we look at the ratio of discretionary versus staples, so that's the black line here. And indeed, in April, it increased a lot, giving a good sign, but it pulled back and it's not really going back up again. In the last 2 weeks, it has been holding very narrow. Also look at this green line. This green line is basically the direction of US interest rate for the 10 years. And it's coming down almost like there would be some risk aversion. People would fly to bonds instead of going to equity.
So now let's move on to the S&P 500. So what are the risks that you see there?
Yeah, before we go there, maybe just two other worries, which are the two sectors which are lagging. First of all, the financials. As you see, we have big descending trend lines here, and it really cannot break it. It failed in May, it failed again at the end of May, beginning of June, and also another sector which is underperforming, which is the energy sector. It's still in a downtrend, and now it's even making lower lows. So these two could drag down the S&P 500, and that's why we still believe there is some risk on the S&P 500. Last time we were just up there at 2405 before the slump, from due to Mr. Trump. And what happened is we mentioned the clouds as a support or risk area, if you wish, and we just hit that and rebounded and making higher highs. So again, same techniques here, probably a bit less of a decline around 2380, because if you look at the weekly charts, basically you do not have any big worrying sign. You see the support trend line is intact, momentum is still moving up, there is no big divergence, maybe only if we move below 2400 and start to move down here and break this trend line, we might have some divergence going more for a post toward 2330, but it's not yet there.
So in light of that, is the European sectors, is that also toppy?
Well, you see, the European sectors was really leading, and it was the rising relative strength which was these indicators. But now, in the last 2 weeks, here between the top and now, 2-3 weeks, the relative strength has coming down, and we see it has really stalled below this big major descending trend line. And the momentum is also turning down. therefore, we could have a pullback, not only to 35.50, but a bit lower, let's say, to the moving average, which is rising 20 weeks, around 2,400.
And finally, Bruno, what about the Japanese Nikkei?
And you see that on the Japanese Nikkei, it's a little bit also the same story, because we cannot pass the 20,000 psychological mark. Here in orange we have the yen, and usually we need a declining yen for the Nikkei to rise, like here we had in October. And here the yen is rebounding a little bit, so it's no surprise that it is stalling here. So both markets which were doing well versus the S&P 500 are now kind of making a pause, and therefore we have to be a little bit worried for the coming 10 days.
Fantastic. Well, we'll wait and see what you have to say in 2 weeks' time. Thank you so much for coming in today and sharing your insights.
You're welcome.
Well, that's all from myself, and Bruno will be back in 2 weeks' time, so see you then.